Welcome back, guys, to my another video. I posted my first video on this channel. I recently created this channel to help spread knowledge about stock market, and I've shared my mindset, my thinking model that I operate with, that I shared on my first video, right? So I wanted to discuss, and I also mentioned about buying a book. If you are really interested, then you should buy a book of Stan Weinstein's uh, prob How to Make Profit from Bull Market and Bear Market. So I highly recommend that book because that book has changed my, mindset and what I think of the stock market. And also, I would suggest you to buy this book. This is the book. I've listened to the audiobook Trading in the Zone. It is a very good, important book because it would help you create that winning attitude. So in the stock market, the as I've mentioned, all these price actions are just a collective emotion, right? Of all investors. And investors mean the promoters, the foreign investor, the domestic investor, retail investor like us. So all of us are included. So how to create a winning attitude is what Mark Douglas would teach you, right? You have to be, and also you can buy another book which is also pretty good. Disciplined Trader. So this is another book by Mark Douglas. So this book is pretty good. It'll help you create your psychological, I mean, help you create your, own psychological space, wherein when you are executing, one of your decision. Like, let's suppose you wanted to buy something, so you have to execute that order. You have to have that conviction to execute that order at that point in time. So you have to have that winning attitude when you are entering into a trade. You cannot think that, once I buy, the stock will go down, right? You'll have uncertainty. There's no chance of having uncertainty, doubt, fear, greed. So those are the things that is very well written on his book, and I have seen his videos, his interviews. I'm not still yet there, but again, this is psychological thing, so it will help you big time in your life as well, right? Anyhow, so my approach to the stock market is by analyzing the technical charts. So I will discuss some of the stage analysis, some of the key points of what is support, resistance. I believe you might know all that, and if you don't, I mean, there are a lot of other channels who will show you what is support, what is resistance. So I'll basically give an example what is support and what is resistance. So stock market operates with two emotions, only two emotions, and those are the emotions. Like I'll just give you different form of them. So the market operates with greed and fear. Okay, greed means people are buying, fear means people are exiting from the stock. So what it creates demand. Creates demand, and fear creates supply. I would not say they are I mean, I'm not say they are exactly the same, but they are correlated. So greed. You would see greed at some point in time of a stock versus other times. So you won't be able to identify, right? So market operates with these two emotions and two zone, which is the demand and the supply zone. So let's discuss this stock. So basically, I choose stocks from different sectors, and I'll discuss about the sector on my next video. But currently, I'm just looking into. I mean, I'll just discuss about some specific random chart, right? I do not know what this company does. Of course, it's a pharma company. I know So there's a pharmaceutical company, and they're currently doing good, or something like that. I'll know from this chart itself. So I'll know from this chart what this company is currently doing, what it has done in the past. So what's his overall background? I'll be able to know by just looking at this chart. And how I analyze. So I'll discuss this on this series. So I've mentioned about some stage analysis, right? So Stan Weinstein mentioned in his book that every stock has four stages. So four stages include stage one, where the stock has beaten very badly and it is currently forming a base at a very low level. That is the point where we call that the stock is currently at in stage one. After stage one, after got some beating, it formed a base, and then it tried breaking out of that base upwards, right? That means the stock is now generating some momentum, and it is ready to move up, right? The company has faced difficulties in the time period when it was trading in the lower base, when it was forming a base. So it was kind of consolidating. The company is, changing its the in fundamentally the company is in bad shape. So let's discuss about this stock. This is Markson, right? So this stock came into the stock market in 2005, and after the opening, it saw a sell-off, right? And after that, it got some momentum, and then again sell-off. So at this point in time, in this zone, it is consolidating. As you can see, if I just zoom in, it is consolidating between 345 to around this range. So this is currently the supply zone where people are not even considering buying here, and this is the demand zone, which is getting support, and it is forming a base, and it broke out that level on in 2012, like after 1 year of consolidation, and then it again broke down. But at the time, so let me introduce you to another technical indicator, which is a very important indicator, which is this moving average. This black line you see along with the price, this is called moving average. And I prefer to keep my timing, the frame, weekly, because the longer the time frame, the better the probability. So stock market is a game of probability, right? And you have to have an edge. Edge means like your analysis, your technical analysis. That's when you'll have you'll have out of 10 trades, if five of your trades are not doing well, and if you know how to keep your winner and how to cut off, cut short your losses, then those two or three winners will compensate, not only compensate your losses out of the seven or the rest of the, you know, losses which you managed to cut short. So that will compensate and give you, it could give you 100x return. So you only won two out of your 10 stocks, but still you're able to get success. So this is the probability. This is the probability. I mean, uh, it is not the case where every 10 trades is a winner. You cannot guarantee that, and no one can guarantee that. The big pros cannot guarantee that all of his 10 or 10 10 stocks will be a winner. There will be losers, and you have to understand and make sure that it is not working out. You have to exit the stock, but do not cut short your profit. Okay, I'll discuss this further on my upcoming series, but let's first just understand the stage. So once it has created the base and it broke out, right? And broke out significantly with some volume. I'll discuss the volume part later in the video. This is a very important segment, which is the volume, understanding the volume. So that needs a separate separate video altogether. So when a company has so the rule so the how the how you would do stage analysis. So if a stock has beaten too hard and then it has formed a base like it is consolidating and then it broke out that level with significant volume, then it will have a momentum and it will start stage two. So this is stage one, right? This portion is stage one. Now it has started stage two. This whole journey is stage two. Now again you see that the stock is started consolidating and it is not going higher of a certain price point, which is in this case 71. And it is not going below 49, right? Now, so what would you do? Here, I would suggest you to, exit the stock if it breaks below this level, which it did not. But it broke out that resistance, the supply zone with a significant volume. You see the volume, huge spike. So that means the momentum is still there with the stock. So you will still hold the stock, right? And again, it reached a new high, which is at this point, which is at 114, and it started ranging between these two price points. You see the price, the ranging, the trading range is increasing. It is purely because of the volatility of this particular stock and the time frame and different activities, news, and all those things move the price, make the stock more volatile depending on the situation. So this whole journey is stage two. Now the stage two is done because the price is now consolidating within this range and it saw a huge breakdown. And at the same time, it is breaking down that 30-week moving average. So the rule of thumb I've written somewhere on another chart, the rule of thumb is never buy a stock that is trading under moving average. And never buy a stock that is trading in stage one, stage three, stage four. So let me first give you let's first understand each of the stages and then we'll come to the second point. So this is stage one when it was consolidating and it broke out that level and then it saw a huge rally, right? To this point and then again trading and then again break out of the resistance zone and created a new high. And again it was ranging and then broke down. So this is stage two. And the range, so this is stage two at this point in time, and this is stage three. Now, after stage three, there should be stage four, which is that the stock will go down. The stage four, I'll share what is stage four. So it is stage three right now, but then it saw another break up on the upper level, and it continued. So it is called then stage two continuation. Okay. So this is stage one. This is stage two. And this portion, this time zone, I mean this period, sorry, is stage two continuous setup. This portion, and this is stage four. This is stage three, and this breakdown to this level is stage four when it is trading under the below the moving average, 30-week moving average. So this is the actual setup, and you'll find this setup in almost every stocks. Every stocks. I can just mark you the levels and can tell you which levels it is in right now. So this is how you would do stage analysis. It's pretty. It's not pretty complicated. You just have to understand the level, right? So this is stage analysis, and you have to understand by looking at each stock which stage The stock is in right now. And since I've mentioned on this point as a point number two, never buy a stock that is trading in stage one, stage three, and stage four. So here, you would not buy the stock here on this circle on the stage one. You would not buy the stock on this position when it is when it had created a new high and as trading between a range. You never buy the stock in stage four because you will see, you'd see the result for yourself, right? You see the outcome for yourself. If you bought a stock here, 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 you'd still make a loss. So stage one is the ultimate stage. I mean, stage two is the ultimate stage. So you have to look out for stocks which are in stage one, and you have to keep a tab on that stock. And what is when it is breaking out that stage one and it met all the criteria, if it is moving, if it is breaking above that 30-week moving average, then you would buy. And you would also buy a stock which is on this stage three setup, and then it braked above that stage three resistance, and it created a new high. So you could buy on the continuous setup. So you could only buy a stock on stage two and stage two continuous setup, right? So you would buy the stock if you did not get a chance to buy in this rally, right? You would buy a stock here because it just broke above that resistance which it created, and it was ranging, and we were not sure in which way it would go. It could have gone below that moving average and create a stage four, or it could go up. So no one knows what happens, right? So you have to wait. You have to wait and you have to see the price action. I believe this was pretty simple and short, but I mean, this is not the end. I mean, there are a lot of other analysis to be done, and each day I'll share a kind of new chart and new structure, and we'll try to understand which stage the stock is in right now and whether it is viable or not, right? So thank you for watching my video. I believe you're liking my content. If you do, please like, share, and subscribe. Thank you guys. Have a great day. Bye.